Hello everyone, it's Arnaud Delapierre. Today we're going to discuss an event that shook the crypto ecosystem, the unexpected fall of FTX. It's a topic that has been much talked about because the collapse of this structure surprised even the most experienced in trading. We will break down the rapid rise of this giant, then see how it crumbled under the weight of its own mistakes. The idea is that you can draw a clear lesson from this story to advance in your crypto approach and sharpen your trading instincts. So sit back comfortably and let's get ready to decode everything together. FTX appeared in 2019, designed by Sam Bankman-Fried, a young entrepreneur who quickly made a name for himself. This crypto derivatives trading platform was able to carve out a space thanks to features designed for ambitious traders. The founder was also behind Alameda Research, which allowed for rapid development. One could say that FTX benefited from strong global enthusiasm coupled with clever marketing. As a result, a colossal capitalization and an omnipresent presence in sports partnerships. But behind this shiny image, a complex and fragile mechanism was taking shape. A company had a diverse range of products, futures, contracts, options, leverage tokens. Many traders saw it as an opportunity to boost their positions and earn quick income. Of course, not everything was perfect. Other platforms already offered similar features, sometimes with more transparency. Despite some criticisms, FTX was able to count on a fervent community that firmly believed in its success. The user-friendly interface and attractive fees appealed to a large audience, even attracting influential personalities. This attraction lasted until the first signs of an imbalance began to emerge. A quick aside to tell you about Notrade, the free app that serves as a real ally for those who want to improve their trading. Available on iOS and Android, it offers quality alerts, real-time analysis, and a polished interface. Everything is designed to increase your efficiency while remaining easy to use. No need for complicated setup. You download it, test it, and you immediately see what it can bring you. If you want to refine your trading strategy, don't hesitate to try it out. It's a way to combine ease and performance. Personally, I've adopted it. The collapse did not happen overnight for FTX. Attentive observers noticed that the financial flows between FTX and Alameda were occurring in a gray area. Colossal sums were circulating in a confusing manner, while risk management seemed completely neglected or non-existent. Gradually, confidence began to crumble. When the rumor spread that FTX might not have the funds it claimed, users sought to withdraw their crypto. The problem was that there wasn't enough liquidity to cover all the requests. It's the beginning of an uncontrollable domino effect. Within a few days, the platform found itself out of funds, unable to respond to the growing panic. Its token, the FTT, which ensured part of the solidity, financial security, saw its value plummet dramatically. Various partners then dissociated themselves and Sam Bankman-Fried's image went from visionary to suspect. The lack of clarity in the financial reports immediately raised suspicions of fraud. Traditional media, always on the lookout, relayed these allegations, amplifying the crisis. Result: suspension of withdrawals, partial closure, then bankruptcy announcement. The reaction of the authorities was immediate. Several investigations were launched to determine if FTX had manipulated the markets or misused its clients' assets. In the crypto world, this case was experienced as an earthquake because it projected a negative image to the general public. Some compared this scandal to that of other giants who have faltered, pointing to a lack of safeguards and an excess of confidence. Institutional investors then began to question the overall reliability of crypto platforms, fueling distrust. Growing The impact on trading was massive. Many projects associated with FTX saw their funding blocked, and the feeling of panic spread from project to project. Regulators took the opportunity to strengthen their rhetoric, demanding more transparency and control. As often in this type of situation, the less experienced investors succumbed to emotional pressure, sometimes selling at a loss. The more seasoned ones tried to limit the damage by reducing their positions. This debacle reminded enthusiasts that caution is paramount in this constantly changing environment. Sam Bankman-Fried, previously praised for his rapid success, quickly became the face of the crisis. His meteoric rise had inspired admiration, but he was accused of orchestrating opaque management. Former employees revealed questionable practices, creating a climate of widespread suspicion. This dual role, both as pilot of Alameda Research and head of FTX, fueled rumors of potential conflicts of interest. Investigators sought to shed light on the exact trail of the money, while Sam tried to defend himself in the media. Public opinion largely turned against him, at all levels. Faced with this situation, other platforms took the opportunity to stand out. Some demonstrated their solvency in real time by proving that each crypto held on the platform was actually covered in their treasury. This reassured some users still shaken by the FTX incident. We saw communication campaigns focus on security and transparency in the hope of winning back the lost trust. Some exchanges have also tightened their access conditions, imposing stricter verifications to avoid missteps. This momentum, however, had a side effect: the reduction of the anonymity that was so appealing to some. The moral of this affair revolves around the necessity to exercise caution before investing. Being well acquainted with the platform on which one places these cryptos can avoid many inconveniences. Carefully read the terms, check the reputation, consult independent reviews, everything to help and build a clear perspective. High returns promised without solid guarantees should be viewed with suspicion. The example of FTX reminds us that a rapid rise can hide flaws. It is better to critically examine each opportunity rather than be blinded by the prospect of exponential gains. Even if FTX is no longer in the race, its story continues to leave a mark. Burnt users now demand more honesty from projects in which they invest their money. The blockchains themselves are not blamed, but the speculation surrounding the tokens remains a topic one might say qualify as burning. We also observe a renewed interest in decentralized solutions, those that promise automatic management without intermediaries. Whether we like it or not, the mark left by FTX has changed the way we perceive the crypto industry, prompting everyone to revise their habits and focus on vigilance. To avoid experiencing such a scenario again, some experts recommend a more balanced diversification. Betting the entirety of one's funds on a single platform can lead to disaster if the latter falters. It is also useful to consider the institutional solidity of an exchange by checking its legal structure and the audits it undergoes. Cryptos stored on a personal wallet also offer an interesting refuge beyond the reach of a potential withdrawal freeze. This set of precautions, even though it does not guarantee absolute security, can make a difference in case of a crisis. Beyond FTX, this period stays reflection on the fundamental principles of the crypto ecosystem. Transparency, security, and ethics must remain our compasses, even if the markets are capable of generating gains. Important. Buzz and announcements should not make us lose sight of the essentials. Analyze the numbers, understand the platform's working method, and be wary of promises that are too beautiful. Regulators are making progress, but each investor also has an individual role to play by staying informed and making thoughtful decisions. This FTX affair should serve as a wake-up call for everyone. To conclude this video, I would like to thank you for watching until the end. We have just explored together the behind the scenes of the fall of FTX, an episode that shook up the crypto news and disrupted many certainties. I hope these explanations will help you refine your own approach and stay vigilant. Feel free to tell me in the comments what you think, or if you yourself have been a victim of the FTX bankruptcy. Any discussion is welcome. To not miss the upcoming videos and continue improving, remember to subscribe to the channel and like this content. I will see you very soon right here for the next episode.